Today's guest is Sunjay Kapur, a billionaire entrepreneur who features in the world's top 2,000 wealthiest individuals according to Forbes magazine's global list. He is the chairman of Sona Comstar, which is valued at over 40,000 crores. Sona Comstar is a mobility technology giant which manufactures automotive parts for 7 out of the top 10 car companies globally. They are also leaders in the EV revolution with over 2/3 of their order book comprising of EV parts. Join me as we delve into the mind of an entrepreneur, a doyen of the Indian automotive industry, and uncover the secrets of scaling a multi-billion-dollar business, attracting private equity, and navigating the complexities of a family office. I'm Sandeep Jethwani, the host of the Create Wealth podcast and co-founder of Deserve. Sanjay, one of the most interesting things about Sona BLW's journey is the series of capital events that have happened along the way. There was a significant investment by Blackstone. There was a merger with Comstar. There was an acquisition of Novelic. There was an IPO along the way. It seems in this journey to this 40,000 crores is very deliberate, very process-oriented around how you went about these things. What was going on behind the scenes?
So I think we need to go a little further back,
Sure.
Talk about it in terms of where we were in 2015.
Mm-hmm.
And I used 2015 as a date or an event, because that's when our founder passed away. My father passed away, and I was running Sona steering systems at that limited at that point in time. My father was managing Sona BLW. We had a German asset. That we had acquired in 2008. So the acquisition journey began, back in 2008. We quite a large asset in terms of the kind of size that we were. However, we were confident that it would bring with it a lot of technology. When my father passed away, there was a lot of restructuring that we had to do, in the group to really create what we've created today. And one of the decisions we did take was we bought Mitsubishi Materials stake out. They owned 25% of the business. We bought their stake out. In fact, JM Finance was our equity partners at the time. And JM Finance and us, as a family, together bought the stake of Mitsubishi Materials and owned the asset because we believed that we knew the technology and we understood the technology, and we wanted to own the technology. From there, the journey's been, quite interesting because, we had a US operation which we shut down and moved operations to India. And that took a year to do. And then, we decided we wanted to look for a private equity player because GM Finance wanted to exit. In fact, around 2016, I sold my stake in Sona to the Japanese partners, to JTech, because I believed that they would do a better job with the company because they owned the technology. So, there was a partial exit given to JM Finance at that time. And then, we decided that to exit them rather than doing an IPO, we'd bring in a private equity player. We did the rounds. We met a lot of private equity players, and eventually we met Blackstone. Blackstone came and bought 32% of the shareholding that GM Finance owned.
Sure.
So Blackstone owned 32 and I owned the remainder. And then we bought Comstar from Blackstone.
Got it.
Because Blackstone had already bought Comstar. And when we did that, Blackstone owned 65% of the company and I owned 35% of the company.
Sure.
Again, a very unique situation to be in because, in the Indian automotive context, promoters were not usually seen to go down to majority shareholding.
Go down to minority shareholding.
Minority shareholding. There was always that fear of giving up control, etc. However, I looked at it as, a much bigger play from a medium to long-term perspective. I looked at it from a perspective of Blackstone bringing to us, the technology that we didn't have, not so much in terms of product and process, but in terms of, financial management, in terms of how to manage negotiations when it comes to M&A, how to monitor a business better. So a lot of the financial metrics that Blackstone brought into the business helped us. And of course, taking us to capital markets. Again, buying Novelic. So we looked at Novelic really as a technology play to continue to go up the value chain in terms of EV, ADAS, and everything else that's happening in everything that's happening and disrupting the automotive industry.
What were some of the implications of, let's say, having somebody like Blackstone own 2/3 of the company? How does that change life on a day-to-day basis from the perspective of the promoter?
So it changes life completely, and it did. When Blackstone came in, I moved from manager to owner, and again that was a decision that it required a lot of thinking. It required a lot of convincing myself that this is what I should be doing, and I did really. When I looked at a lot of business models of companies from the from the West, I looked at companies that have lived beyond their time. I looked at the Bosch kind of companies, ZF, Swarovski, Henkel. These kind of companies have, built businesses that have lived for a very long period of time with large families, but the families don't really play a role in management per se. They're more like owners of the business.
Sure.
And I'm not suggesting that promoters are not good managers. I'm just suggesting that if you can find better managers, you shouldn't be shy of bringing in those managers to run the business.
Sure.
And I felt that, I could play a better role as an owner as opposed to a manager. And when Blackstone suggested that to me, I thought about it a lot. It's a big change. Changed my life completely, in fact. Because today, most of my time I spend in the family office, running the family office. And, I spend some time working with our team on technology and what next in terms of technology, because again, for me this is a 50 to 100 year play. It's not a short-term thing, and I'd like to see this business grow way beyond us as a family, but I'd like the family to have ownership in the business forever.
Sure. Sanjay, indulge me on this, because I think and the reason I do it is because I feel that this is genuinely a challenge for most family businesses, is that sometimes when the professional managers want to take decisions which are not in line with how the family owner thinks about the business, right? And I'm sure you would have come across many such instances when you felt that directionally the company should do something different, whereas some of the professional managers wanted to do something exactly the opposite. At that point of time, how does decision making play out?
Yeah. So, it's never there's no sort of one solution to this. I've been fortunate in having a CEO that I have a great relationship with. And Vivek, my CEO, is a partner to me in terms of business. And, we have enough conflict when it comes to certain ideas or decisions. However, when a decision is finally made, we all follow that decision.
Sure.
And that's, I think, the way it should be. Again, when you look at, when I go back to your question, the operational management is responsible for profitability.
Right.
And I feel that operational management should be given the power and the autonomy to make those decisions, because they've been put in place to do that. The board, they report into the board. The board's responsibility is to put good management in place and make sure that management is taking the right decisions. If decisions are taken with your values in mind, I don't feel we can go wrong. We fortunately haven't come to a place where, I want to do something and the managers want to do something else.
Sure.
We've always sort of been able to have those discussions. We've spent time, days in fact, in terms of discussing whether we should do certain things or not. Most times we come out with a consensus that, this is the reason, there's enough reasoning behind each of us, each of our thought processes, and that gets discussed. And I don't feel that, I feel that businesses that are, following their value system, that are making their decisions based on their value system will make the right decisions.
And Sanjay, how does life change after you move from having one significant shareholder like Blackstone to going public when you have God knows how many shareholders, and being able to yet engage with large institutional investors like GIC. So how has that transition been like?
So, we've always been a public company right from inception when you look at Sona Koyo. So, we've run businesses which have been listed.
Sure.
So I'm pretty accustomed to that. Even in Sona Koyo, we had JTech and us as a family as the large shareholders, Maruti as the third largest shareholder, and then, the public. So it's not something that's brand new. However, in Sona BLW, we've consciously tried to create or have as many institutional investors as we can and limit the number of retail investors. However, you're responsible to the investors and the shareholders, and that's what management does. I mean, that's what management is there for. If you didn't have business cycles, and you didn't have investors, and you didn't have people asking you questions, you wouldn't require management.
Sure.
And it's management's role to make sure that the shareholders are satisfied. In fact, what we do as a business is we, every year we will spend some time as a board understanding what our largest shareholders want.
Sure.
Because the shareholders are talking to the management often enough. The shareholders are not talking to the board. And therefore, as a board, I ask the board to sort of come together and listen to what the largest shareholders, or the large 3 or 4 or 5 large shareholders, and they're mostly institutions, want from the board, and what they expect from us as a company, and then we can work with management on that.
Sanjay, just switching gears, I think there is this whole mega trend of electrification or EVs that is happening. From the outside, and it seems that this has a direct impact on auto components. The number of components potentially is reducing. The supply chains look very different. And potentially there is some incremental upfront investment as you build out the supply for some of these new components. How did Sona think about this? And in general, what's the industry doing?
So, we took a bet in 2016 where we believed that things would go electric. We were one of the early adopters of, the whole EV megatrend, as you're calling it. And I feel that from the component industry, and I want to call us the mobility industry. I don't want to say we're limited to automotive, because when I look at mobility, when I look at drones, when I look at bots, when I look at robotic arms, when I look at all that's happening in the mobility space,
Sure.
We're well positioned to supply into that. Yes, supply chain has become more complex because you've got semiconductors, you've got batteries, you've got all kinds of different components. Cars are going to keep selling, and if not, cars will. I'm not saying cars won't sell. Cars will continue to sell, and mobility will play a big role. So the landscape will widen. And what we can supply into.
How? Because I'm very curious about when you said there are multiple opportunities, that also means more confusion in terms of figuring out where to first deploy capital. And I'm always very curious about how promoters or management use their capital. What's your mental model around that? Is it built around payoffs?
So running a profitable business is very important to us, and all more so because we want to invest in technology. As a company, we invest between 3.5% to 5% of our revenue in tech.
Okay.
Right, in R&D. Our industry average is much lower. However, that's increasing and has to continue to increase. So we as an organization are always looking at what's the next technology that can be adopted, because we are supplying into a global market space. When we're supplying to a global market space, we have access to so much more in terms of tech than somebody else would who's supplying only domestically. And when you look at that, just case in point, the sensor company, we bought it because we understood that safety regulations were changing, and this is an opportunity. So we went out and made that investment. Now, hopefully it's a great bet.
Sanjay, I want to broaden this a bit and now talk about how the Indian auto component space is evolving, right? And you mentor a lot of young leaders in the auto component space. How are some of the others in this category thinking of evolving their business? Are Indian businesses being sufficiently creative when it comes to evolution?
Yeah, so Indian businesses, and specifically if you talk about the auto component industry, are aware of the fact that the investment in technology that we have to make is far greater than we have ever made before.
Sure.
And people are stepping up, making that investment. People are taking that chance, making those bets. I still feel that a lot of joint ventures that remain will either buy out their Indian partners or their partners will buy them out. So
Okay.
that once they've understood and learned the technology, I think that's really the way to go. When you talk about the younger generation in our industry, they're extremely curious, I would say. And I mentor the YBLF, which is the Young Business Leaders Forum of ACMA, and we're already we've already done a couple of sessions with the professors from IIT to understand design, to understand the concepts of design in automotive, and how that's changing and how it's evolving. And I see that a lot of these young generation entrepreneurs want to bring change to their business, and not just change from any other aspect, but from technology. And they want to understand and learn technology and adapt that technology into their own businesses.
Are they willing to look at capital structures differently to be able to fund this?
Absolutely. People are willing to look at private equity. People are willing to look, and I'm pretty certain you'll hear more about it. Because people are exploring private equity opportunities because they do see the benefit. In terms of what's happened with our company. We've seen a great benefit by bringing private equity in. And I think more people are going to look at it from that perspective.
And if somebody were to think of raising private equity in the auto components business, what is a sort of a checklist or 2 or 3 things that you will tell them that you should prime the company up with?
I think the number one thing is to have technology. A technology leader is extremely important. Given the fact that quality, cost, delivery, etc., all those are hygiene factors today. I feel that the company must have good tech and great management. These are 2 things that are extremely important for a successful business, and these are things that private equity players look for, because what they cannot bring, while they bring financial acumen and financial capital, etc., they won't be able to bring the technology that the auto component guys can bring. And I think, therefore, that when companies are looking for private equity and they're priming themselves up for bringing in private equity, they must have made investments in technology.
Sanjay, while we were talking earlier, you referred to the fact that now you spend a lot of time with the family office. What's been the objective that you've laid out for the family office? I mean, obviously there are returns, but is there some thought process on downside control? Is there a thought process on diversification? I see that you're an art collector, so is that a conscious investment decision that you're making? So walk us through how the family office thinks.
So I think, as far as the family office is concerned, we have a good concentration of public equities. We have a few small private equity investments we've made, some safe capital, in this stay safe bucket. Art is an investment class, and we have looked at art in terms of the fact that the value of art's gone up drastically, and it's good to have. But again, we try not to do too much. Again, you want to keep it as simple as you can. With public equities, the notion is that we want it to be compounding, and over a long period of time, it should give you good returns. That's the way we look at it. We work with good managers, and my wife and I both sort of get involved, in the review process. We do a formal review every month, but we're always looking at what is happening in terms of public markets, in terms of private equity or venture capital, opportunities that may come about, and other investment opportunities.
And how much of the decision making is you individually selecting investments versus giving a mandate to the family office and them running it?
So we get involved in most of the decisions,
Okay.
in almost everything in terms of when you're looking to make an investment. It's a full-time job.
Yeah.
Running a family office is not as as easy as it sounds.
Sure.
Because again, this is capital that you're managing, and you're also investing in other companies that are. So you're buying companies, you're buying businesses. And you're taking certain positions in businesses, so you want to make sure that you're doing the right thing.
Amongst all of these activities, Sanjay, that you're doing, I can see this trophy behind you, which is a polo trophy. And from what I understand, you picked up polo pretty late in life. Like, how did that process happen?
So, I saw a polo game when I was about 8.5 years old. I was in America. I went to a summer camp in a military academy in Culver, Indiana.
Wow.
And when I finished that program, I went to Chicago, and a family friend who had taken me or had sort of introduced me to the summer camp, one of their family members was playing polo, and I saw the sport and I was quite fascinated, and I forgot about it till I was in my 30s. And then I had, some bug in me that wanted to sort of ride, and I started riding, and then picked up a stick and I started playing, and I never looked back ever since.
Sanjay, this has been a fascinating conversation. I feel like we've covered a lot of ground. Thank you so much for your time. We've really enjoyed this one.
Thank you.